The commodity markets are not for entertainment. They're not to foster sports betting if there's no economic purpose. They're really for fundamental things that matter to the economy. That's a taxpayer-supported agency, and so one would expect that the taxpayers will get something that will support the national economy.
Welcome to the Policy Protocol, a brand new show from CoinDesk that gives you a bite-sized overview of all the happenings in crypto law and policy from the past week. This is your espresso shot of everything you need to know to be in the know. I'm Renato. Here's my co-host, Rebecca. Rebecca, what's your hot topic this week?
There's so much to choose from, but I think we can't overlook the SpaceX IPO last Friday. It was the largest in history. SpaceX went public on NASDAQ. I think there are a few really important points about this. One, the amount of demand and the amount of retail demand. SpaceX targeted, I think, around 30% for retail. Most huge IPOs only give 5 to 10%. And the interesting thing was it wasn't even enough to go around. So there were all these vehicles that sold pre-IPO access to SpaceX, and a lot of them were in these SPV vehicles where they ended up not getting the allocation for it and had to refund investors. So Binance and others ended up not having access to it. I think Kraken actually was able to give some investors access to the SpaceX IPO, but they only did it at a tiny pro rata sliver. So some of the retail demand was not even able to be met. I think there's a big contrast, though, and I know we're going to get to all sorts of perps questions later, but there was on-chain finance, as we call it now, Trade XYZ, which is on Hyperliquid, ran a synthetic perpetual on SpaceX. And so that wasn't backed by any shares. And they gave access to SpaceX perps very early. They started trading really high, maybe in the 200s or something like that. But I think the most interesting thing about the synthetic version of it was that it ended up, as we got closer and closer to the SpaceX IPO itself, converged somewhere between 150, 160, and 180. And so having the price converge around where the SpaceX IPO actually closed the first day, which was a little more than 160, is really interesting. And I think offers a lot to talk about from are these new types of, I was going to say derivatives, not meaning like actual derivatives, but they are actual derivatives. But are these new types of financial assets really something that offers retail or others things that the traditional vehicles cannot?
Yeah, I think there's legitimate concerns around the level of participation by retail in this IPO. I mean, typically I think it's closer to 10%. This time it was 30%. As you said, a lot of retail demand on top of that. And that's being met by these derivative products. And I think there should be a lot of concern about whether or not, what is pricing looking like here? How is pricing being inflated right now? And ultimately, will retail hold the bag? I mean, I think there's a lot of questions being asked about that, both sort of, in by the press and in group chats, but also in Capitol Hill. And so I think it'll be interesting to see whether or not this impacts our policy towards IPOs going forward and some of these synthetic equity instruments.
Yeah.
So my hot topic was Terry Duffy, CME, and Perpetuals. I mean, Terry Duffy dropped 2 atomic bombs this week, Rebecca. I mean, atomic bomb number one, Terry Duffy is the CEO of CME Group, the biggest name traditionally in futures. And he said, after having a long and successful run as CEO of CME Group, he said, "I'm going to be leaving very soon." He named his successor and set that up this week. And then he said, "Okay, on top of that, we're suing the CFTC, and we're suing the CFTC over the topic you and I had a debate on with some great guests from Kalshi, and we had John Lothian on last week about whether or not perpetuals are in fact futures or swaps." He thinks they're swaps. He thinks the CFTC went against its own guidance, went against the Dodd-Frank Act. And as a result, he went on CNBC yesterday and threatened that he's going to be filing a lawsuit today.
Yeah, and my response to that is, I was also, speaking of group chats, someone said it's giving Jay Clayton, where you have a big lawsuit and then you leave, which is what Chair Clayton did, or Jay Clayton did when he was chair of the SEC, sued Ripple and then left. But I do think there are two big parts to this, and one goes to, where are we on the innovation side in financial markets, and has CME Group been able to keep up? Will they be able to keep up? As you said, Terry Duffy has had a long and storied history. He was also called the sixth commissioner of the CFTC for a long time, given his influence and work with the CFTC. And so now taking this tack against the CFTC on his way out should be very interesting to watch. And, there's this frenzy of people getting DCMs right now to be able to offer perps, whether they be crypto perps or, more traditional perpetuals. And the question will be, well, will everybody be left holding a DCM bag when they should have been getting a swap execution facility license or something like that? So very interesting to see what happens there.
Absolutely. Definitely a lot of controversy about what the CFTC is doing. People like CME Group feel like they're being left out or they're not being treated fairly. And who better to talk about the CFTC and the SEC than our guest, Dan Berkovitz, who is currently at Millennium Management, but has the, I think, notable distinction of not only being a former commissioner of the CFTC, but also being the former general counsel of the SEC. So somebody who offers a rather unique perspective with a very storied career. Thank you so much for joining us, Dan.
Well, thank you, Renato. Thank you, Rebecca. It's a real pleasure and honor to be here on your podcast.
So Dan, as a starting point, I'll start off easy. There's a lot of talk in this administration about harmonization of the SEC and CFTC. They even talked about trying to move them into the same building or having joint rulemakings. As somebody who has the unique perspective of being a high-ranking official in both of those commissions, what's your take on those efforts?
No, it's great that they are taking that effort to harmonization. As you know, very well know, and some of the issues that you've mentioned here, the derivatives market can involve securities, the securities market can involve derivatives. The jurisdictional lines between the products are sometimes blurred. So, I've been on three sides of this. I've been on the CFTC side, I've been on the SEC side, and as a lawyer in private practice, advising clients on which is on which side. So I've seen it from the end user, so to speak, side, who really, really demand that clarity. So to the extent the two agencies can provide that clarity, can provide clear lines between jurisdiction, that's great. And you shouldn't have to go to one agency and then they say go to the other agency and you go ping pong back and forth, which I understand happens every now and then. I would note, however, being at both agencies, that there should not be unrealistic expectations as to how far it can go, because both agencies are operating under different statutory mandates and they have to respect their jurisdictional mandates. So part of the difference is statutorily driven, but to the extent that you can work together, give consistent interpretations of the statutes, so much the better.
Markets move fast, crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
We're going to bring you into the biggest, hottest debate that we had last week on the show, and that Terry Duffy previewed yesterday when he was on CNBC. What is your take on whether perps are swaps or futures?
Well, I've followed the debate that you had on with John and Kalshi last time, and I'm really curious to see what the CME complaint says, exactly what they say, whether they come down on the swaps. And I know that they've mentioned the whole issue of futurity on the contract. So I'm curious to see exactly how they frame that up in the complaint.
Yeah. So Dan, one thing that you actually are rather famously have weighed in on when you were at the CFTC is event contracts. In other words, prediction markets. now there is prediction market litigation all over the country. And there's a question about whether or not sports event contracts are swaps. There's also the question of whether or not the Commodity Exchange Act, the CEA, preempts state gaming laws. So can you give us your views on this ongoing litigation between the
Sure.
CFTC and the states?
Sure, I'd be happy to. Just preface it. I was at the CFTC. I was on the commission when Kalshi got its DCM license, and we worked with them. I think prediction markets have tremendous potential for adding valuable information and potentially hedging tools on various economic or issues that have economic significance and consequence. So I think this is a great new innovation. I think it's got potential use. We'll hope liquidity builds and that it will become part of the risk management tools that the private sector uses. At the same time, I think we need to remember what the fundamental purpose of the Commodity Futures Trading Commission and the Commodity Exchange Act is. And the fundamental purpose in the Commodity Exchange Act, Section 3 of the CEA, says it's to foster national and international commerce by providing a means for hedging, for risk management and price discovery, and fostering trade and commerce as a result. So there really, whether you call it an economic purpose test or exactly how you phrase it, there has to be an economic purpose to the markets that the CFTC regulate, and those relate to economic purposes in the context of the CEA relate to risk management and price discovery. So the question really is, when you have a market like sports betting, is there an economic purpose or price discovery purpose to that? When I was at the commission, we had an applicant, ErisX, who wanted to trade NFL contracts because the houses wanted to hedge their risk and they wanted to create a national market for this risk. And they were required to provide economic purpose under the regulations at the time of the public interest test, which are still the regulations pending the revisions that the CFTC has proposed. And we found that they couldn't do it. We found that there wasn't an economic purpose under the CEA to the sports betting contracts. So I think that's really the fundamental test, and that goes way, way back in the history of the CFTC and the commodity markets, which if you're interested, I'd be happy to even go back in history, but it's really fundamental. The commodity markets are not for entertainment. They're not to foster sports betting if there's no economic purpose. They're really for fundamental things that matter to the economy. That's a taxpayer-supported agency, and so one would expect that the taxpayers will get something that will support the national economy.
So I'm going to take a little liberty here and ask two questions. One, just having to come off of what you just said, but a lot of the prediction markets and other prediction market proponents on the sports contract side have said things like, well, what if you're a vendor in the city where the Super Bowl is taking place and you're worried about a hurricane, and so you want to hedge against loss of, hotel rooms being, taken, or food if you're a food vendor. What's your response to people who have made that type of argument from an economic perspective?
Well, so the hurricane contracts actually, the event contracts related to hurricanes do exist, and they do have an economic purpose. So if to the extent that people are worried whether a hurricane will wipe out a football game or cancel the event on the weekend and affect hotel rates, or just affect, whether the hotel will be there or through a tornado or whatever, or hurricane, those are legitimate contracts which are currently permitted. But the CFTC, we never found, ErisX attempted to demonstrate it, that hotels and businesses and soda vendors, really their revenues depend upon, whether somebody throws a touchdown pass in the last few minutes, or even what the point spread on a particular game is. The revenues from like a hotel for next Sunday's game don't really depend on the score of next Sunday's game. So they might depend on, how popular the team is overall, but the particular contract for whether the home team wins that game or not, we did not see, and people tried to really provide what you just said, Rebecca, that type of hedging purpose, but weren't able to demonstrate that in a rigorous way. You can say it, but that doesn't make it true.
So I have a bit of a spicy question. You were at the SEC during the come in and register phase of things, where the CFTC kept saying to crypto, you guys should just come in and register. And there was a period of time where people tried, and then I would say people really stopped trying, and people in the crypto industry or businesses were not willing to walk in the front door. And I think now we see a lot of crypto businesses trying to walking in the front door and registering for all sorts of new products in all sorts of new ways. So what's your take on why we can register now and couldn't register back then?
Well, I think one of the things that happened during the come in and register phase, as you mentioned at the CFTC, there were ongoing negotiations at the time on that. But then in 2022, we had the FTX debacle, and that sort of froze things in its place. Naturally, with a huge fraud like that, the prospect of sort of granting additional relief, and it might have been different parties, and I don't want to suggest that there was accusations of fraud or anything like that beyond the FTX case, but that really made it very difficult to proceed along that track in that environment in the latter part of 2022. At the time, the agency was trying to proceed on a come in, register, and then when you had this major fraud, I think the agency felt much more in a posture of, well, we got to enforce the law rather than accommodate it through negotiation. So I think that was a significant factor. And then time passes, FTX, that matter is in the past. A new administration comes in and can do a fresh start.
And do you feel like that's the same thing of why people couldn't register at the SEC as well during that time period?
Well, that's what I was talking about. That's what I was talking about at the SEC.
Got it.
Well, thank you, Dan. This has been fantastic. We appreciate your perspective and insight, and thank you so much for joining us.
So thank you. Pleasure to be here. Thank you.
Wow. Well, that was interesting, Rebecca. Speaking of interesting, it seems like one of Dan's former running mates, / boss at the SEC and CFTC, Gary Gensler, has made an appearance recently.
What they're trying to do is to, one, say that they have authority over sports betting, which I don't think they do. That will play out all the way to the Supreme Court, of course. And two, they're trying to reverse a rule we voted unanimously back in 2011, unanimously to prohibit agreements, contracts, or transactions, listen, on assassination, war, terrorism, gaming, or unlawful acts.
He's back.
He's back. Yes, he is. And he's filing amicus briefs in the Sixth Circuit prediction market litigation. Gary Gensler has decided that, after, I would say, his incredibly controversial and destructive actions at the SEC related to this industry, has decided that he's going to pop up and, go after the prediction markets. I will say that whatever you think of the arguments there, and I do think, Dan's points, I think are ones that I respect. Whether I agree or not is a different story, but I respect Dan's views. Gary is just the wrong messenger for anything in this space, in my opinion. I mean, really, after the scapegoating of the crypto industry and targeting of that industry and making it so that even people who wanted to register couldn't come in and register, to use your language, I think going after prediction markets in this way actually creates a narrative that prediction markets are being scapegoated in the same way that crypto is. It's not helpful at all.
I agree. And I think we can agree that Gary, in many ways now, is the harbinger on the death of innovation. And I don't think anybody wants to see prediction markets killed in their, even in their form that they are now. I think people may, even those like Dan and others who want to see some of what's happening on prediction markets curbed, they don't want to see prediction markets go away, because there are really useful vehicles for hedging, but also for producing information. For a long time, people have talked about prediction markets as information markets. And I think when used correctly, they will force information to come out publicly in a way that is very different than what the press does today. Of course, present company excluded. We only put out information in a very transparent way. And so I think that Gary may be looking for some relevance going back to academia after being the villain and the center of so many things for so long. He misses the spotlight. So here he is back again.
Yes, indeed. Back again. Well, you wouldn't let me make Gary Gensler the person of the week, Rebecca. So who did you make the person of the week this week?
Well, I think we can agree that we want to keep the show a co-hosting show. So we agreed that we're going to make Jamie McDonald the person of the week. Jamie is a longtime partner at Sullivan and Cromwell. He's the former head of enforcement of the CFTC under Trump 1. He was a prosecutor in the SDNY for 3 years doing white collar crime. And he also has represented many in the crypto industry for a very long time. He has big crypto clients. He's done big crypto investigations. And so he is very well acquainted with a lot of the crypto issues and the other innovation issues that are coming forward now. Obviously, his confirmation hearing has been put on hold given the whole controversy between whether Bill Pulte is staying as DNI and Jay Clayton is going to be put in as DNI. But ultimately, I think we can say congrats to Jamie McDonald. Many of us have worked with him and know him very well. And we hope that all goes well through this confirmation process.
Yeah, absolutely. Smart guy. Very impressive lawyer who I have worked with and against myself in the past. I will say that he is, like you said, very familiar with this industry. Although once he is the top cop at SDNY, I don't know whether the industry will like him as much as they do.
I agree with that, actually, Renato. We can end on an agreeing note on our person of the week.
Well, thank you for joining us for the Policy Protocol. And please continue to give us your comments and feedback. We'll be here next week with more guests and more debate.